forward. Okay. What's up? So this is saying the move from X to A, right? X to A, when it retraces, it needs to be 38.2% or 50% to Fibonacci,
Oh,
right?
yeah.
And then when you measure from A to B, the Fibonacci retracement from A to B should be between 38.2% to 88.6%. And then when you do from X to A, the D point needs to be at 88.6%. So let me show you what that means. I actually really do like harmonics. Before I got heavy into the market makers method, I was like training
Oh,
really, really hard on the harmonics. Yeah, so this is on the monthly and the weekly.
oh, yeah, yeah.
So let's do on the weekly. Okay, so there's two harmonics. This is one harmonic, and then there's another one right here. So let me just visibility, practical. Okay. So if we're looking on the, let's do on the daily. Okay. So this is X, A, B, C, D.
Indeed, yeah.
So from X to A, Fibonacci, X to A, the B point is between 50 and 61.8. So pretty much it's the 50%. Okay.
Yeah.
And then when you do from A to B, Fibonacci from A to B, this is 88.6.
Yeah.
And then when you do from A to X to A again, okay, and it's 113%. So this, right, so there's two entries for the bat. The first entry is the 88.6, and then the second entry is the 113%. So this is a bat extension. So it's at the 113% Fibonacci retracement level.
Oh, yeah.
So if we look on the weekly, yeah, so it wicked 127, but I bet you it'll close above here. So my first take profit is going to be 65, and then the second take profit is going to be 67, 250, or 67.5 right here.
Oh, okay.
I mean, so this is an easy swing trade on the weekly time frame. I went low on the lot size because this spread on this pair is huge. But like, yeah, if we go from here, 300 pips.
65.
It's yeah, 65. That's 300 pips.
Yeah.
And then take profit number two, like 500.
But yeah.
So this is what I want to do. I want to I want to swing trade on the weekly time frames, on weekly and the monthly, man, because really that's where the pips are, man. Like catching these moves, like on these time frames, like pretty much all this trade is, it's at the quarter point. This is at 62.5. This is just a support. We're just trading from zone to zone, right?
Yeah. I was looking at it. Well, I was thinking maybe there was got to be a second leg to form the double, but didn't know about this pattern.
I mean, it could, it could. I mean, this is. I mean, like I said, this is still on the high, like really high time frames. I feel like what they did, they hit them with the gap because people were trying to sell or buy early, and they
Yeah.
probably held over the weekend. And so there was a bunch of things going on over the weekend with the G7 meeting and Trump with escalating the trade war. And so whenever anything like that happens, the commodity pairs, they're going to be impacted. So New Zealand dollar, Australian dollar, Japanese yen. So whenever there's anything fundamental like that happening, those pairs are going to be affected. And so that's essentially what happened here. We got hit with the gap, weekend gap, people trying to buy early, hit them with the gap, and then they dropped it another good amount of pips. You see that gap?
Yeah. Yeah.
So there was a gap here.
And then
Okay,
still
so
went
that's,
down.
that's a 26 pip gap on top of dropping it another 50. And look at it, it's mooning now. So with that point two, The 2.02s, I'm up $15.
So, so what you think? It's too late to get in, like right now, or it's best I just wait since it's already gone.
Uh, it, I mean, I still consider this one leg.
Oh,
I mean, this still could be one leg. It could probably come back down here. It could still do that.
okay.
I just watch it and just try and just latch in on the trend, but just make sure you use a small lot size. So, because the spread on this pair is huge. Because I'm actually down $40 already because I entered it with a point one and then it dropped, hit my stop loss 30 pips.
Oh,
So yeah, so this pair is kind of wild, but I mean it pays out. It pays out.
yeah, yeah,
Yeah, so that's New Zealand dollar, Swiss franc, um, and then also you can also just wait for the stop hunt low rise because that's essentially the flow that we want, right? Since we're expecting it to go up, so you can also wait for the stop hunt low rise in London if we get it, or we might
oh
get
yeah,
a pin to some EMAs. I mean, honestly, if you didn't get the entry now, I mean that's fine. Just wait for the London session and see what happens. But just know that we're looking for a rise on this pair. But you just have to use your best judgment on when to actually get in on it.
to get it, yeah. The NZD USD is
Yeah.
doing
So
something similar like this, but
yeah,
this was a bit stronger.
yeah. Same thing. So let me mark this chart up. Okay, so I actually already have it marked up for you. So again, um, what I did is I found the key levels on the monthly, right? Key levels on the
Yeah,
monthly. So point 0.4, point 0.5, point 0.6, point 0.7. Like that. So that's going to be my solid line. So between point 0.4 to point 0.5, that's 1,000 pips. Okay. So then I
yeah.
use huh?
I actually watched the video that on your website,
Oh yeah,
I did some of the period with this, and
nice.
went down to the weekly and move and mark everyone at 500 at the halfway in between 1,000 at
Yeah,
500 pips.
nice.
Yeah,
And then, but also like sometimes like the range will be so wide, so you have to use the quarter points as well. And like for New Zealand CHF,
mm-hmm.
like this one I had to do because this is 600 and then 65, 775. And then what I had to do was I had to use this, go back to the weekly. I had to get the dotted line and then put it at 0.625. And this is where the quarter theory comes into play, where you're using these quarters. So 625, and then you have 0.65, and then you have 0.675 right here, 0.675, and then you have zero point 0.7.
Yeah,
And then you see how price reacts at these levels, at these quarter points, and at these half points, and these whole numbers. So that's what we're doing here. But yeah, I mean, this is a solid pattern. This is solid. I mean, it's still in a downtrend, yes, but we want it to come. This is just a pullback. It's
yeah,
just gonna pull back. So when we go to NZD USD, same thing. Um, I want to say that this is a harmonic pattern too. That's right. So we go from here. See, it's right at the 113. Same thing.
yeah,
So I do here X, A, B, C,
C and
D.
D down there.
Yeah. And you can't see it right now because it's practical. So then I change to showcase. Boom.
Yeah,
This is a solid harmonic pattern play. Yo, what up? Yeah, so again, so what the harmonic pattern says is okay, you take the Fibonacci, so we take it to the 61.8, so we can take it to the 65, quarter point 65. Oops, didn't mean to do that. 65. We can take it to the 61.8. And then you can take it to the 78.6.
So those are levels that you're expecting the pullback, right?
Yeah. Yeah. So your stop loss would be, like below here, probably like 63. So entries here. $312, and then stop loss would be 63. Let's do a 50 pip stop loss. Okay, 50 pip stop loss, 312 pip take profit. Like that. So what this is saying is that we're risking 50 pips to gain 300 pips. So that's that's a 6-to-1 risk to reward ratio. So depending on your lot size, that will let you know, put that into numbers. So like there's this app called Stinu that I've been using. I don't know if y'all use it or not. But like essentially you can type in something. So you can type in your account balance.
Yeah.
And then you can put your percentage risk. Like, so I want to risk 3% of my account per trade, and then your stop loss amount. So I put 50 pips. Okay, so then I select my currency pair. I do NZD, CHF. And so this is saying that for a 50 pip stop loss, I should use a 0.05 with the 50 pip stop loss.
Okay.
So my loss would be, so if I took the loss, it's $30, but I'm gaining, huh?
What's the name of that app?
It's called STINU.
I'm going to check it out.
Yeah, so it's really good because really with trading, man, all of it is just money management. Money management. It's money management. So money management is being able to manage your losses, having consistently risking 3% on every single trade, not over leveraging on one trade versus using small loss on another trade. Just being consistent on every single one of your trades. That's basically what it means. Because we aren't in control of the trades that we win or the trades that we lose, but we are in control. No, sorry, we aren't in control of our wins, but the only thing we're in control of is our losses. So like, lifting our stop losses or just keeping our stop loss in play, not touching it, and just if it hits, it hits. Just
yeah.
Let's see. Okay, and then so this is good. Let me send that to the group. NZD USD weekly. Do y'all find this channel useful?
Go again? What, the Telegram? The Telegram?
Like the premium setups that I've been doing, that I've been trying to do.
Yeah, bro.
Yeah, because the idea behind it was I would have all these setups, but I wouldn't actually share them, and then I'd forget about them. So every time I see a setup, I want to like write out what I see, and then just like keep track of it, so I can like refer back to it later how it played out.
Yeah, true.
Okay, so that's NZD/USD. So same thing. Look for buys. So stop, hunt, low, rise during London. Look for the pattern W's. Or in New York, you know, they switch it up on us, so we never really know when it's going to get. But yeah, look for stop, hunt, low, rise. Stop, hunt, low, rise. Okay, all right. What was the next pair that I did? Euro USD. Okay, so what'll be powerful is on the weekly, right? We got the 513 cross and candles close above, right? And then that would confirm that this downtrend is pretty much over with, because we've been downtrending since May or February, January 2018. So really, we can see that price came to, like, it pretty much came a couple pips shy of the 1.1 support, right?
Yeah.
But I mean, if we look at this is just like a break and retest of a support resistance zone, right? Support becomes resistance, or I'm sorry, I don't know what I'm trying to say. But yeah, this is just like a flip zone. So what I'd like to see here, I like to see a move to the upside. If we look on smaller time frames, all right, we got that bullish first leg, second leg, right?
Yeah.
And this is also a harmonic pattern as well. If we look on the 4-hour time frame, right? Look, I need to get my charger. 1 second. Okay, so I'm gonna put y'all on harmonic patterns because they're good to know. I mean, I don't use them all the time, but when you see them on higher time frames, like, man, it's crazy. So this again is a bullish bat pattern: X to A, B, C, D. So if we look here, and I can share this with y'all as well, this little cheat sheet. My friend made it for me when me and him were training our eyes on it. So this is your X, A, B point, C, D. So when we measure from X to A, our B point's at 38.2. When we measure from A to B, our C point is at 78.6. And then when we measure our D point here from X to A, it lands perfectly at 88.6.
Yeah.
X, A, B, C, D, 88.6. So that's a perfect harmonic bat pattern, bullish bat pattern. Crazy. There it is. Oh, whoops, I didn't mean to do that. Okay. Yeah, so this is, so it came exactly to the 200 on the 4-hour. So I'd really like to see what it does now. If we can continue this bullish move up. But what I really like is how we got this low right here, and then we got a higher low right here. So I want to see what happens now. Like, will we get a move to the 1.125 and then 1.15? And you notice how here I had to do the quarters 1.125, 1.15, 1.725, 1.725 here, then 1.2, 1.225, 1.25. So if this continues and trends up, our take profit would be the 50 on the weekly, the 200, the 800, and you see how all of these resistance, I'm sorry, the EMAs, they're all right next to like key levels.
Yeah, that's true.
1.2, got the 1.15 right there. And then we got this weekly quarter point right here. So yeah, so I'm like kind of in the middle with this right now because ideally we'd want to be in here, and
Right.
we're not in. So I guess really what we can do right now is I guess draw a Fibonacci retracement tool from swing low to swing high, and let's see where price lands. Ideally, we want it to land somewhere around here because this is a broken. I mean, this is like a resistance. This was resistance zone, and then it broke it. Now we want it to turn to support, right? So we get a move down to the zone 50 in between 50%, 61.8 to go here. This kind of aligns with false move week beginning, a move to the downside, give us a W during London to go up, maybe. I mean, this is all speculation right now. I don't know. But I mean, we essentially we just want to trade what we see when the time comes.
Yeah.
But I mean, this is. I mean, it would make sense for price to come here and find support here because this was a resistance zone previously.
Yeah, so just have an expectation of it to just break and do the retest right there. If it don't, it don't, but just have an expectation then.
Yeah.
Okay.
Yeah. So yeah, but to keep an eye on it. I mean, that's what I would like it to do. With the dollar being weak, with the escalating trade war stuff. I mean, I want to see dollar go to hell. So that would be ideal. But I mean, we'll see what happens. Let's see what happens at this zone. Let's look at the dollar index. I should have probably started everything off with that, but I didn't. This is cool. Price came exactly to where I wanted it to. It sucks because I always have things marked up, but I always forget about it. And this is exactly why I made that channel, so I don't forget about things, so I can see how things play out. But you see how what I did was I just drew a Fibonacci tool, swing high to swing low.
Yeah.
And this is just a let's see. I think this is our money pattern. Okay, never mind. All right. So with this one, dollar index. So what I did was I just drew a Fibonacci tool from swing high to swing low. And I used this as a swing low. And it came up to the 71 to 78%. And threw us the pattern and pretty much tanked. So ideally, we'd want to see more downside here. We want to see more downside here. So this could be the pullback up into these zones for another push to the downside. They're here or somewhere around here. I like that zone better. So we could get, a little push higher, like a continuation to the downside. It's on the 4 hour time frame. We just need this thing to like fall off a cliff. So we can see that price didn't break this high.
Yeah.
So so we should see price to come 96. Let's go lower to like 95. Like I want to see the thing drop. So that's pretty much my look on the dollar. Price is slowing up. And every time I see this where like price starts to like form this, like where it like does this and kind of curves off, like this thing's gonna drop. Like this is just telling me that momentum is slowing down and the bulls are failing to like push higher. And so the bears are coming into control here, and that's why it's looking more corrective than impulsive. If it was like impulsive, it would like, look like this and it'll have a lot of strength. But like with the corrections, it looks like this. Price kind of consolidates and then drops. That's why we have the bullish flags and bearish flags. We have a bullish flag, price comes up and then consolidates and then goes up. Bearish flag, price goes down, then consolidates up. And that's pretty much what it's doing now. It's a bearish flag. That's what's going to happen. Well, I'm not going to say that's what's going to happen, but I would like for that to happen. Because at the end of the day, I don't know what's going to happen and what's not going to happen. But I do know that this is a bearish flag. So this is my flagpole, and then this is my area that it's consolidating in. So let's get this breakout. And then typically this is like a measured move. So like you can measure the distance from here to here, and then you can project that the breakout from out of this zone will be from like the same, will be the same. So it's like a measured move. It's what they call it on the streets. So that would be cool if that actually did happen. Yeah, so that's the dollar. Let me see. G Chief. So I really like G Chief because number one, these are like all-time lows, right? All-time lows price. I mean, look over here, price has never been this low. So whenever you have all-time lows, like shit, man, we're gonna buy. Hold on. And like kind of like with the NVD CHF, this is GBP CHF, so it looks like they could, move in the same direction.
I think I'm gonna add that pair to my chart.
Yeah, it's a good. This would be a good pair to trade, just because of how cheap it is right now, and like with all of the pound pairs, like like GBP USD GN, those both like shot up, but these right here, they really didn't move that much, right? So from the 19th through to the 26th, they only moved like 200 pips. But I believe like GU moves like a crazy amount, like 300 or something. I don't know. But like, yeah, I just really like the fact that this one, it like the distance that it moved last week was like relatively low. So this is one that I'm interested in trading. And so essentially I wanted price to pull back down to this zone, but I really don't think that's going to happen. What I think is going to happen is going to pull back to the EMAs, and the EMAs are going to hold the support. So that's what I wanted to look at happening. So essentially, what I'm looking for now is just I want to see a move to the 1.25 and then to the 1.3 zones. Because again, we are at an all-time low. So this is the inverted head and shoulders as well. If you look on the 4-hour time frame,
Oh yeah.
left head, right shoulder. So and you see how price pinned the 50 or the water, the 50 EMA, right? And now price should just hold it as support. And again, this is another pair that has a huge spread. So like you definitely want to use risk management. And this is a huge swing. This swing is going to be for 1.25 and then 1.3. So if you entered now, right, that's 500, almost 600 pips. 500 and then to 1.3, like 1,000. And that's realistic. This is realistic. What we're doing is really we're just going to support and resistance zones. So the 1.25 correlates with the 50. It might pin the 50, pull back, and then try and pin the 200. And so again, what I did was I did the same thing. 1.2, 1.3, 1.4, 1.5, those are all solid. And then the weekly support and resistance, the 1.25, 1.35, 1.45, those are dotted lines.
Yeah.
And so like the whole idea with this is just identifying where price is headed. So we can see prices at an all-time low, at an all-time support. So we know price goes from support to resistance. So we know that price, if price is going up, the next support or the next resistance zone it's going to hit is 1.25 to 1.3 in that order. Let's see. Can you show the TDI? Okay, so TDI showing divergence, lower low, higher low. It's on the monthly. On the weekly, I like how it looks on the weekly. Already shark finned out of the water back in, and then the RSI line also is giving us the blood in the water where it crosses the trade signal line. So that is giving us our entry on the daily time frame. Or maybe not. I don't know. I just know that whenever this crosses on the 15-minute time frame, that means it's giving its signal on the hour time frame. So maybe it's giving the signal on the monthly time frame. I don't know, just excuse my rambling. But yeah, so this RSI line is going to go to the market baseline. So I believe the market baseline will be this resistance around the 50 EMA. And then the upper volatility band would be the 200 right here. So the whole idea with this is you just trade out of the volatility band back in, and you go from volatility band to the volatility band.
Okay.
So yeah, so that's G Chief. It's a really good buy. Also, I like GJ as well because just looking at it again, it's doing the same thing on the weekly. Shark fin out of the water. It's crossing the trade signal line. On the monthly, it's out of the water now. Shark fin out of the water. So that buy signal is looking really good. And it almost pinned the 125, right? Almost pinned the 125. It was about 100 pips away. But the first leg was exactly on the 125. So also, if we just, hold on. If we do a Fibonacci from here to here, it is closing above the 88.6. So this is actually a harmonic pattern. Sorry. X A 38.2 C D. Same thing. Bat pattern. So this is also a really strong harmonic pattern on the monthly time frame. So our targets would be to the 135 and then the 130 and the 140, right? And then 148. Really good, really good, really good. Hold on one sec. Yeah, so with these, definitely use risk management because that should eat your account. Weekly. This is 135 and 140. Cool. All right. Do y'all have any pairs that y'all want me to go over? I'm just going over the ones that I found in here. So that
you can check and see on gold and see what's up.
Man, gold's crazy, man. Gold's crazy.
Yeah, it is.
Gold's crazy. Let me see. Okay, so what should we do here? So let's do 1600. $15. And 14. And then 13. And then 12. That's all the data we need for now. All right, cool. Okay, so let me look on the weekly. I mean, I really do think that price is going to go to 1600. It doesn't make sense for it to sell like right in the middle, like right here. I think it's going to go to 1600. because price broke through, right, the support at 15. It needs to go to 16. Yeah, it broke through to 15, broke through, retested at 15. Let's go to
Yeah.
16. Yeah, let's go to 16. So we'll look to see what happens when price gets to 1600.
Okay.
Okay, so that's gold. But also this is so much like going on fundamentally that like gold, like just based on macroeconomics, should be bullish because there's just so much risk going on right now and investors that want to be risk averse and go to the safe haven, blah 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 blah. So yeah. All right, so that's gold. I'm not gonna trade it guys. It's just too volatile. That shit's stressing me out. AU kind of wanted to buy. Been wanting to get to buy for a little bit. So looking here on the monthly, um, I did the same thing for 9.951. So prices headed towards 0.65. Wanted to go to 0.75 and then 0.8, but um, I guess if you look on the weekly, I could draw this is like in this wedge. And like typically, whenever prices in like a wedge like this, would get like some breakout to the upside because our price is like coiling up, ready to like shoot up to the upside. So like really, I really still want to see this move up, but I know that there was probably like a huge gap. Yeah, there was a huge gap over the weekend. So really, so 513 cross. All right, candles are closing above. So let's wait for a pullback. Probably like to right here. It's probably done pulling back now. So price is gonna go up. So this is still good for the buy. But like what I've noticed is whenever there's a gap like this and there's a move to the downside, it typically like buys right after. Because like I guess the whole purpose of this type of move is to jam people up that like got into the trade prematurely. So like if people were trying to buy when it wasn't ready yet, they hit them with the gap over the weekend. Okay, so whenever the market opens, there's a huge gap. So there gaps over the stop loss, and then they drop the market even more. So if they're over leveraging or if they have a big lot size, they're going to get margin called immediately. So I mean, but this was I mean, 10 pip gap, 12 pip gap, and then it dropped another 60 pips. So you see that that's your buy. So let's see that it buys. Um, a retest of 513 and then a move to the upside. Let's see. But yeah, that's kind of my take on AU. I still wanted to see what the upside targets. 0.75 and then zero point 0.8. But we'll probably just get like 0.70 and then 0.75. I did not go over GN. I pretty much like deleted that pair off of my Medford 4 after last week. Shit was crazy. So GN, good old GN. So I did the same thing here on the monthly. I didn't waste my time doing the dotted lines up here because why? So here's interesting. We got like a double bottom essentially on this weekly support at 1.85. And then also price pinned the 50 EMA right here. Price pinned the 50 EMA. Please show TDI. Renee, what does the TDI tell you right here? That's not really telling me anything from what I can see. What do you see? Drop down to the weekly. All right, weekly. So weekly is interesting. Weekly's pinning the 200 EMA now, which is a 50 EMA on the monthly. I mean, ideally for like a sell signal, we wanted to like shark fin to the upper volatility band. The daily. The daily looks like. I mean, really, let's just get like a little pullback to like 1.9 or something for a continued move to the upside. I think there will be a good M setups this week. I could be wrong. Yeah, this is just kind of weird. Like this chart, GN is just in a weird spot. It's in a weird, funky spot. But I mean, it pretty much bought all of, it bought all of last week. But yeah, so I guess NZD is getting strong now. So pound maybe getting weak. It's the M setup. Right. Divergence. Yeah, so let's see what type of correction we get. We might just get a correction to like the 50, 1.8 or 1.9, honestly. It depends on what the pound does this week. But this is all just like accumulation. So let's just see. Yeah, there's no real clear setup here for that I can see, other than just like a sell to like the support zone at 1.9, 1.88. And it's 200. I mean, damn, it's 200 some pips. If I sold this pair, my TP would be at the 15 to 200. Yeah, right. Because we are counter trend trading, and so the 50, 200. Yeah. So if you did sell this pair, let's say now, it's 250 pips. I mean, that's solid. So wait for the 513 cross, right? Well, 50 and the 200 on what time frame? I guess on the hour. It already dropped. If y'all don't have like a lot of background noise, and y'all can like just talk to me through the see it dropped. Yeah. Yeah, there was something funky happening. That's why right when the market opened. Yeah, it's already dropped 100 pips. It's crazy. Try not to. It's all good. So yeah, let's see GN come to the support zone. Yeah, because like really price broke through this support, right? So just break and retest the support and the resistance. So let's, see it come down here. Okay. And then let's see go up. So yeah, so that's just something to look at. Um let's see if pound continues its strength to the upside. CAD-J. Okay, CAD-J. CAD-J looks like it's on its way to the lower volatility band on the monthly time frame. But when we look on the weekly, it's breaking out. So we got a nice shark fin, I guess, coming out of the water. That's on the weekly. Daily. I had price in this little wedge as well. Because I wanted to see like a move to the upside last week, but it only pinned these EMAs and dropped. And it especially dropped on Friday with the announcement of the trade wars, tariffs. I still don't really see a setup here, so I'm not even gonna look at this chart. NVDJPY. So it looks like NJ is coming towards the 60. What is this? All right, 65 support zone. I really don't see a setup here either. Yeah, there's no real setup here either. So I wouldn't even look to trade this pair. Euro JPY. So Euro JPY was a really easy. It's just like a trend line, draws a trend line on the daily time frame, and it's just been playing off of the trend line. But there's still no real setup here either, in my opinion. So I wouldn't even look to trade it. So yeah, so really like the setups that I saw are like the ones that I'm really interested in. So the NZD CHF, pound CHF, GJ. That's pretty much it. Like these are like really big swings as well. CAD CHF, that looks nasty. I really don't trade any USD pairs. I need to take the time up to mark up the levels though. Let's see, Euro CHF. Ooh. Yeah, this is how when I'm practicing my levels, this is how I'm analyzing and marking it up. So this was pretty interesting. We had, this trend line play pretty much. So it bounced off the trend line, and the trend line correlated with the 200 EMA as well. So now it's pretty interesting because, we got this little support zone here. And when we're looking, so that's how it looks on the monthly. So we're at like really low levels on the monthly time frame. It looks like we're starting to get like a bullish up move, so like a first leg, second leg. Hey. So on the daily, it looks like it's forming a W, first leg, second leg, 513 cross, candles close above. So this could be a nice buy setup. I need to analyze the levels here. So once I get off of this call, I'll probably do that, and I'll drop the levels in there. .1. Yeah, so we'll probably do another webinar midweek, like Tuesday or Wednesday, so we can see which pairs have formed their anchors, so we can get our pretty much directional bias for the rest of the week. And spotting the midweek reversals. We can't really do that now, unfortunately, because the week just started. So I like on the webinars on Sundays, I just like to give my directional bias on higher time frames. Analyze our key levels. Just as like a sanity check. So this is 1.3, 1.2. And then 1.05. 1.15. All right, so what did that tell me? After doing that, this tells me that price could go to 1.05. That's pretty much what that told me. So price can either hit this trend line and continue up, or hit the trend line and come back down. So if it comes back down, it'll be 1.05. If it goes up, it'll go up to the 50, then the 200, and then 1.5 here. But yeah, NVD CHF is moving right now. It's moving. Look at that. Beautiful. Gap closed. So it has already moved 60 pips. It's a good deal. Yeah, so this is like level 3 consolidation. So what they have to hit the stops, do a false move to the low, create that fourth level, if you will. But it's really just inducing people to sell to go long. But yeah, this is a really, 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 really good setup. But yeah, that's all I got for now. If y'all have any setups, drop them in the chat. Drop them in the chat. Let's keep the conversations going. I like what we're doing so far. We're doing some good stuff, and let's kill it this week. Let me know if y'all have any questions, and let's have a profitable week.